Hey everyone, welcome back to the channel. It's Sebastian Boyer, the approved guy. And on this video, I'm going to be talking to you about using an SBA 7A loan for your next business acquisition. Without further ado, let's get right to it. So an SBA 7A loan is an amazing loan that you can get through any bank that offers SBA loans. Now there's two types of banks. There's your preferred lender and a bank that's not in the preferred status. The difference is if it's a preferred lender, they can package and close the loan and then submit it to the SBA so you can get your money faster. Where if they don't have a preferred status, they have to submit the loan package to the SBA for an approval, which can delay your closing, dramatically. So you always want to work with a preferred lender. I'm working with about 25 lenders right now. So I have a lot of banks to choose from. And the reason why is because the government is the SBA and the government sets the minimum guidelines and requirements that the banks have to follow. However, the banks are the lenders. And as a lender, they don't even have to participate if they don't want to. So for example, if you go to some of the major banks, big banks, to get a startup SBA loan, they're going to tell you they don't do startups. You have to come back after 2 years. Some banks have a minimum of 500,000, some 300,000. Some don't like certain industries, but that's because it's up to the bank. And so depending on the bank you're talking to, if they don't like your case, they don't like your industry or, what your variables that you're working with, you may still qualify. You might just be talking to the wrong bank. And that's why I work with so many banks. So anyways, an SBA 7A loan is a wonderful loan because of the term. You get up to a 10-year term. The interest rate on this loan is going to be a fixed rate on the bank side, which could be as low as 2.5 to 3%. It's up to the bank. So let's call it 3%. And then prime, which fluctuates. Right now, the prime rate is a little high. It's at 8.5. So you combine that plus 3%, we're at an 11.5% loan. However, this is not a fixed interest loan. It does fluctuate, and it's going to fluctuate quarterly in most cases. So that means that every quarter, based on the current prime rate, the interest rate may adjust. Right now, the rate's high, and it's going to go back down. So I've talked to people who tell me, I don't want an adjustable rate. I want a fixed rate. And I tell them, well, a fixed rate right now is not a good idea because you're locking it in at a high rate. What happens in a year or so, hopefully, the rate starts going back down, then your rate is going to go ahead and follow prime in the SBA loan. It's not going to stay fixed at the high rates that it is now. So, obviously, as interest rates go higher, that hurts, it pinches, but they're not going to stay high forever. They never do. It's going to go, economy's going to rebound and rates are going to go back down, and so will your loan rate. Okay, so the reason it's attractive is because of the term and the interest rate is relatively low considering other loans on the market, which are much, much more expensive. Now, as far as business acquisition is concerned, when you're looking at buying a business, you have to make sure you're able to get at least 3 years tax returns from the seller. If the seller's not willing to give you these tax returns, well, unfortunately, the bank's not going to be able to make a loan. They need to see that. They're also going to need a year-to-date profit and loss statement from the seller and a current balance sheet, as well as a debt schedule. They're also going to want to see a seller note or a letter of intent, which basically lists the sale of the business, including all of the assets and everything that's included with the purchase of this business. The bank needs to review that to determine the value of this business and if the business is currently performing in a desirable debt service coverage ratio on its own. Now, you as an individual are going to need to present at least 3 years personal tax returns. If you have an existing business or any affiliates, you're going to have to show 3 years tax returns on those businesses, as well as debt schedule, current year-to-date profit and loss statement and balance sheet, a personal financial statement, a business plan is required. And in that business plan, you have to define, what's your strategy? What do you know your market, your competition? How are you going to spend the money? You need to get granular with this. You need to really break it down to the nitty-gritty of the use of funds. If you're asking for working capital, well, what does that mean? Working capital needs to be broken down. Are you asking for payroll? Are you asking for marketing. What exactly are you going to do with the money? Be granular, get specific. You also need to show projections for 3 years, and those projections for the first year have to be broken down monthly. And you need to be able to show that in your projections, you're going to be able to debt service coverage ratio at least a 1.15, where most banks want to see a 1.25. You can check out my website, SBA Experience, for a debt service coverage ratio. You can check out my website, SBAExperience.com, for a debt service coverage ratio calculator, and it'll also help you to calculate what your monthly payment would be on your SBA 7A loan. So if you want my assistance, I'm happy to help. I have many banks to work with for you to help you get the loan. I don't charge any upfront fees. I help you to put together the loan and package it and submit it to my bank partners. If they like what they see, I'm going to introduce you and get you started with a loan application with that particular bank. And so make sure you submit the link in the description below for a free consultation. Check out SBAExperience.com, OrangeFi.com, BusinessCredit101.com, TheApprovedGuy.com. All the links will be in the description below. I look forward to working with you. God bless you. I look forward to helping you close your SBA 7A loan. And don't forget, that loan can go up to $5 million, 10-year terms. All right? Talk to you soon. Oh, by the way, guys, if this video was of value to you, make sure you like, subscribe, and share. Please let YouTube know that you like what you're seeing from me so that they promote my video and more people can take advantage of this information and potentially my services. Peace and God bless.